Unemployment increases for the first time since March. Tesla and Twitter exceed expectations, and tensions between the US and China heat up. This is the Civil Reports Weekly Review, where we take a look at the headlines that move the markets during the week and all things investment related. On Monday, the markets traded choppy, dropping into negative territory at the market open, but the Nasdaq was able to find buyers, and its move up appeared to pull up the S&P 500 and the Dow along with it. The Dow closed up 8 points, the S&P 500 closed up 27 points, and the Nasdaq closed up 263 points. The markets also got a boost from the World Health Organization's praise of Oxford and AstraZeneca's published report on its COVID-19 vaccine. This happened as places like Florida were reporting over 10,000 new coronavirus cases for the fifth straight day. Jack Ma's Ant Financial put its IPO in motion. The largest fintech company in the world plans to list in Hong Kong and Shanghai and will not list in the US, likely due to the political friction between the US and China. And IBM rose 4% in after-hours trading following the company's earnings release. The company beat EPS estimates by 9 cents and revenue estimates by $400 million. Overall revenue was down 5.4% year over year, but Red Hat revenue was up 17%. On Tuesday, markets closed mixed, with the Dow closing up 159 points, the S&P 500 closing up 5 points, but the Nasdaq closing down 86 points in what appeared to be more capital leaving tech stocks and flowing into value stocks. Some news that moved the markets on Tuesday: after 5 days of discussion, the EU agreed to create a €750 billion recovery fund to be distributed as grant and low-interest loans to EU states hurt by the pandemic. In more news out of Europe, Robinhood pulled the plug on its UK launch to focus on its core business. In the US, Tuesday was big on earnings news. Snap reported an EPS beat by a penny and a revenue beat by $9.6 million. Revenue grew 17% year over year, and global daily active users grew 17% year over year. Coca-Cola reported an EPS beat by a penny also, but missed revenue by $60 million. Revenue of $7.2 billion in the quarter was down 28% year over year. Concentrated sales saw a big decline, and the company is still experiencing weakness in the away-from-home sales channel. United Airlines reported they lost $9.31 per share during the quarter, missing estimates by 6 cents. Revenue of $1.4 billion was down 87% from Q2 2019, but beat analyst estimates by $80 million. The company reported it averaged a cash burn of $40 million a day during Q2 and hopes to get that down to $25 million per day in Q3. And Lockheed Martin topped estimates, beating EPS estimates by 34 cents and revenue estimates by $1 billion. Revenue was up 12% year over year, and the company raised its 2020 outlook. On Wednesday, stocks closed up, with the Dow closing up 165 points, the S&P 500 closing up 18 points, and the Nasdaq closing up 25 points. The markets got a boost from the news of Pfizer's nearly $2 billion agreement with the US government for their COVID-19 vaccine candidate. That was enough to keep the markets up after the news of the US's order to Chinese delegates to close the Chinese consulate in Houston over national security concerns. Slack filed an antitrust complaint with the EU against Microsoft, citing that Microsoft is abusing its market power by coupling its Teams product with its Microsoft 365 suite. Microsoft Teams is a direct competitor to Slack's product. Wednesday was also a big earnings day. Tesla reported a non-GAAP EPS of 50 cents and a revenue beat by $640 million. Revenue was down 5% year over year, but the company posted free cash flow of $418 million and is still pushing for 500,000 vehicles delivered this year. Microsoft reported an EPS beat by 9 cents and a revenue beat by $1.4 billion. Revenue increased 12.8% year over year and was driven by the work and learn from home trend created by the pandemic. Chipotle reported an EPS of 40 cents, which was in line with estimates, and a revenue beat by $20 million. Comparable sales fell 9.8% during Q2, but digital sales increased 216% during the quarter. And Spirit Airlines reported an EPS miss by 78 cents, but a revenue beat by $39 million. Revenue of $138 million during the quarter was down 86% from where it was a year ago. On Thursday, markets were down big on some heavy selling in a few major names. The Dow closed down 353 points, the S&P closed down 40 points, and the Nasdaq closed down 244 points. Apple stock sold off on an Axios report that the company is facing a consumer protection probe from multiple states. In addition to that, MarketWatch reported that Apple is pushing back its fall event from September to late October, which will likely delay the release of the next iPhone. Tesla dropped almost 5% on the day, giving back its gains plus some from Wednesday. For weekly unemployment, 1.4 million Americans filed for benefits last week. This was the first increase in the number since March, which was not a good sign. Thursday was another big earnings day. Twitter reported an EPS miss by 16 cents and a revenue miss by $24.5 million. Twitter did see a 34% increase in monetizable daily active users, which topped a lot of expectations. Intel reported an EPS beat by 12 cents and a revenue beat by $1.1 billion. The company reported a delay on its next generation chips, sending the stock down 10% in after-hours trading, and American Airlines reported it lost $7.82 per share, but that beat estimates by 8 cents, and the company beat revenue estimates by $100 million. Revenue was down 86% year over year, and American Airlines reduced its cash burn to $30 million a day from $100 million a day. On Friday, all three major markets closed down. The Dow closed down 182 points, the S&P 500 closed down 20 points, and the Nasdaq closed down 98 points. The market took in a lot of bad news during the day. China on Friday ordered the U.S. to close its consulate in Chengdu in retaliation to the U.S. ordering China to close its consulate in Houston on Wednesday. The markets also digested American Express's earnings call, where the company reported an EPS beat by 35 cents, but a revenue miss of $57 million. Revenue was down 29% year over year due to a decline in consumer spending. Then there was the next round of expected stimulus that still hasn't been agreed upon by lawmakers. The additional $600 that unemployed workers received on top of the unemployment benefits is set to expire and could have dire consequences for the public, the economy, and the markets. Overall, the markets closed down on the week. The Dow closed down less than 1%, the S&P closed down less than 1%, and the Nasdaq closed down 1.3%. In crypto news, the cryptocurrencies we follow all made moves up during the week. Last week, Bitcoin closed out our week struggling to stay above 9,000. This week, it closes out our week at $9,630, up 5% from last week. Ethereum was up 22% over the week, closing out at $285.87. Litecoin was up 3.2% on the week, closing the week out at $44.69, and Ripple closed the week out at 20 cents, up a penny from last week. Crude oil closed the week out at $41.34 per barrel, up close to 2% on the week. A big winner for the week was ProShares Ultra Silver ETF, AGQ. The ETF that tracks silver was up 34.2% on the week. A big loser for the week was First Energy, FE. The stock dropped 30% on the week on news of the company being linked to a bribery scandal. That's a wrap for this week's market review. If you want to dig deeper into the headlines we covered, the links to the stories are in the description below, and a link to sign up to our weekend article in Focus is also in the description below. And if you're ready to get serious about investing and creating wealth, check out our latest quarterly newsletter, The Silver Report, serious investment ideas presented in a way that experienced and novice investors can understand. If you're ready to master the markets, check out our newsletter at SevilleReport.com. Thanks again for checking out this week's market review. This channel is dedicated to anyone who wants to start investing but doesn't know how or where to start. If you have any questions, ask in the comments section, like and subscribe, and may your next investment be your best investment. See you next week.